Hi, this is Rich Bevelhimer at Touchstone Business Advisors with the first installment of merging and/or selling your CPA practice. So you want to sell and be done, or do you want to merge and work less and work only on the clients and types of businesses that you really enjoy? That's one of your first questions. A lot of people that we talk to have CPA practices and they say, I need to form an exit strategy. I want to retire in 3 years, 5 years, or 10 years. I know I need to do something. It's better to do something before I have to do something. So what they really want to do is they want to merge. They want to merge with another firm where they can reduce their workload, still get paid, and make money off the practice that they developed and merged into the acquiring firm. And we can do that. We've got at least three firms in the Denver area that we know that are looking to acquire and merge other firms into their existing practice, and would love to keep those existing CPAs on board. So that's not an issue, and a lot of CPAs don't realize that that option is available. They think that if they sell it, they sell it, and they have to be done, and they're not ready for that. So there are options out there. That's the first thing. You can always sell it and be done. But if you need to work a little bit less but still keep your income stream, that option is available for you also. And like I said, we've got several firms that we work with that are looking for just that arrangement. All right, second thing, being prepared to sell is vastly different than wanting to sell. And you never want to wait until you have to sell because of illness or injury, or it's just too late for whatever reason. So having an exit strategy is critical, and that means if it's in the back of your mind, give us a call and we'll talk you through what the sale may look like, what your options are, etc., etc. But give us a call before you have to sell. Now let's talk about being prepared to sell. We get a lot of people that call us that they want to sell, but they're not ready. They're not prepared to sell. At a very minimum, and we will spend a great deal of time with you on helping you to prepare to sell your CPA practice. But at a minimum, you're going to need 3 years of financial statements and 3 years of tax returns. You want to have easily available the average billing fee per type of client, whether that's business tax returns versus individual tax returns, write-up work, review work, audits, whatever that is. You want to have those averages available, and those averages need to be at market rates. You're not going to get the highest multiple for your firm if you're charging below market rates, because the acquiring firm then is just going to have to raise those rates, and they're worried that those folks will leave when they do that. It's better for you, who've got the relationship with those people, to raise your fees to market rates. And we can talk you through that, but you've done a good business for your client. They're probably wondering, if you're not charging them market rates, why you haven't. So you can charge a fair rate for your work, and you deserve to charge a fair rate for your work. All right, on to technology. Again, to get the highest multiple, you need to have some technology in place. You need to make it as easy to transfer that practice as humanly possible, and that means employing technology to the best of your ability, and that may be going paperless, scanning everything as it comes in, dealing with all of that getting rid of the paper as quickly as possible and dealing with it in a paperless, electronic fashion. So, if you're scanning documents, good for you. If you're not scanning documents, that's something that you're going to want to look into. And related to technology are systems, and that means, do you have a system in place, or is somebody else auditing your tax return work? Do you have a billing system? Is that billing system attached to your software your tax preparation software? Do you have a fee for each form plugged into that system so that it spits out a fair and reasonable and market-based fee when that tax return is done? And then if you adjust it, that's fine, but you want to have systems in place for cross-checking that work, for billing that work, etc., etc. All right. Now, everybody wants to know how to get the highest multiple for your practice. The first thing is, most of us are familiar with the 100% of annual billings benchmark, and it's a common benchmark. I know you get postcards in the mail from these national billboard places who tell you they're going to get you 1.25 or more for your practice. Maybe on the East Coast or the West Coast. That is not typical in Denver, Colorado, or in Colorado in general. I'm not saying you can't get that, but I'm saying that's more likely on the coast. So I think those postcards are fairly misleading. 100% of billings is the benchmark, but that means you've got a premium practice. That means you've got all the things we talked about in place. You're charging market rates, you're highly automated, you've got systems in place, you've got a good staff in place. That staff's got non-compete agreements so they can't steal the clients, on and on and on. Okay, so to get the highest multiple for your practice, you want to be prepared, and we can help you with all of that, but you make it easy for the buyer to make a decision to pay you the highest multiple. If you make it hard for the buyer, they're not going to pay you the highest multiple. It's just that simple. If you go to buy a used car and you see two cars exactly alike, and one's clean and has a maintenance record and one's dirty, you're going to pick the clean one every time. So make your practice clean, and we can walk you through that. And the second thing is price versus terms. We all have talked to CPAs, sold their practice, and they tell us, I got 100% of my annual billings. Well, the follow-up question to that is, what were the terms? Because I'm telling you, if they got 100% of billings, they didn't get a check at closing for 100% of billings. They got some amount of down payment, 10, 15, maybe 20% down, and then they're getting paid out over a period of years. So that's all negotiable. To get the best price, you are going to have to be flexible. But if someone's going to give you 75% of your billings at closing, or 100% of billings, but you're going to get 20% down and the rest over the next 3 or 4 years, which is better? Especially if you can work for them for the next 3 to 4 years and kind of double up on your income. All right, that's all the time I've got. Look for Chapter 2, because we'll delve into this more in Chapter 2. And thank you for taking the time. Make it a great day. There's all of our contact information. Please give us a call. We've sold 4 CPA firms in the Denver area in the last year. We know what we're doing, and we'll help you get the most for your business and get it for you in the least time possible. Make it a great day.